Yo guys, SelfFX, welcome back to another video. Today I'm gonna be showing you how I personally learned how to trust buy side and sell side liquidity ranges, right? In other words, session highs or daily or weekly highs, right? How do I actually regard them as pretty much something that's favorable or high probability, if that makes sense, right? In other words, right now we are currently in it's currently Saturday, 9 September 2023, right? I'll be breaking down Friday's GU move based on my personal profile, the Power of 3, right? With just a few tweaks and enhancements, I would say. But it's all still simple when you get like the grand scheme of things, right? So it's market correlations and all that, right? This is pretty much our profile, if that makes sense, right? This is the new day open line. This is the Asian high, right? Then this is the London kill zone, and this is where we look to execute our trades bearish if we have a bearish bias, right? Regarding that price swept the Asian high, right? And then price created the Asian high, right? We're currently having this as our buy side, the Asian high, right? This is the new day open, right? This is midnight. So this whole impulsive range higher is our Judas swing, right? This is our manipulation phase, meaning that it's going to collect or run on buy stops to draw lower, right? We get displacements here. Price reacts, targeting this favorably gap right here. Then it draws lower, right? Some of you might be asking, why did it violate this one and go to this one, right? In simple terms, this are high, this are low, our center. Anything above our equilibrium is premium price, so it's most likely gonna react off that range, right? We even have one here, but price managed to sweep it before it dropped lower, right? So yeah, breaking down right now, I'm just gonna try breaking down this pretty much this whole setup, and then we'll be going into the whole market correlation thing, right? Because this, I promise you, this will increase your accuracy and profitability if you approach it proper, if that makes sense, right? If you don't have selective hearing and you just listen to everything I'm about to tell you. So yeah, everything personal for me starts from higher time frame, right? So on the daily, right, this is our current candlestick. This is Friday, right? On the daily, price managed to create this CB right here, sell side imbalance, buy side insufficient, which is a favorably gap moving lower, right? Using this high and this week low, right? This is the gap. So price revisits it and then draws lower, right? So within here, within this week, right? Within here, this is pretty much where this was happening. This whole range lower, right? So I'm gonna break this whole range down, right? Let's go. We scale down to the 1 hour time frame from the daily. This is the daily fair value gap, meaning it's this one. Here it is. Within it, on the 1 hour time frame, we have an additional CB fair value gap, right? Meaning that now we are looking for we're pretty much refining the daily fair value gap, meaning that we look for inefficiencies within it, right? And the most clearest one is this one, which so happens to be in the 1 hour time frame, right? So like right now we've got this high and this high. Price sweep this high, right? This was our manipulation phase, right? Meaning that it was this whole move right here. This high is pretty much this high, right? Now we're looking for a rejection to draw price lower, right? We scale down now to the 15-minute time frame, right? Here's our Asian high. Price draws lower, sweeps it, and then price sweeps the Asian high and then draws lower, creating a displacement, right? On the 15-minute time frame, we have a fair value gap, right? We have this highs right here. I'm going to be showing you how to identify, how to be confident that price is going to be willing to respect your profile using SMT divergence, right? Using multiple symbols, I'd say, or instruments to verify this, right? So still on the 15-minute time frame, from this to this fairly gap right here is pretty much this inefficiency right here after this displacement, right? Price draws higher, and then now at the minute price hit this 15-minute fairly gap, you could have taken a short, placing your stop loss above here, right? But if you want to be fancy with it, you can also refine the 15-minute time frame the same way you refine the daily all the way to the 1 hour, right? Which would look something like this, if that makes sense, right? So this is a 5-minute fairly gap which formed within the 15-minute range, right? And bearing in mind, this is the equilibrium or the consequent encroachment of the 15-minute fairly gap, right? So anything above the 50% level is premium. So as soon as price hits the 15-minute fairly gap, you could have went short, right? If you're still not confident with that, you wait for price to draw lower to create a further or lower time frame displacement, meaning that price sweeps the most recent low and closes below it, leaving a fairly gap like this. Price draws higher and then draws lower, right? So there's pretty much multiple ways you could have executed your trades, right? Just different refinements and all that, right? But like right now, since this is our main profile and our main focus, right? How do you trust these highs, right? Because personally, I tend to not trust highs being swept like this alone, right? I'm looking for some form of confirmation using other pairs or other symbols or instruments to support if price is going to be willing to respect this Asian high, right? So like now, we've got GBP USD and Euro USD, right? And if you pay attention, these two markets are heavily correlated, meaning that they tend to go the same direction, right? And if you pay attention, GBP USD managed to sweep the high, right? And then Euro USD managed to sweep the high, right? So if I was to be confident in executing a short in any of these two, right, I would actually prefer one of them not sweeping the high, creating an SMT divergence, if that makes sense, right? So if it's not presented, let's say I'm looking to take shots on GBP USD, right? And it's not presented on Euro USD, I scale to or move to the dollar index, right? And if you pay attention, GBP USD sweep the Asian high, the dollar index, DXY, USDX sweep the Asian low, right? Meaning that when GBP USD is bearish, USD index is bullish and Euro USD is bearish, right? Those are like pretty much the basics of understanding the market correlations, right? So like now when all of them have swept the high and DXY sweep the low, right, we look for correlated instruments that are correlated with the dollar index, if that makes sense, right? And now these are the yearly bonds and yields, if that makes any sense, right? For example, right now we've got the United States government 10-year yearly bond, right? Year bond that with DXY. And if you pay attention, we have this wick right here that just managed to, like, we have this wick right here, right? And then price drawed lower like this and failed to sweep this low, right? Same way as it did right here, right? So that's pretty much our second or our first phase to identify if it's gonna be willing to respect the high, right? Or pretty much in DXY, if it's gonna truly reverse, if that makes sense, right? And if you're not confident about if you're not confident about this price range, because it almost seems as if it's straight, you would scale out or change into the US 20-year bond, right? And if you can see, with this ones, we have an SMT divergence, meaning that the dollar index managed to sweep the Asian low, and then the 20-year bond, right, failed to, meaning that this is a high probability SMT divergence, right? And personally, when I'm looking to execute trades like this, right, I'm more comfortable with seeing at least two SMT divergence across all the instruments, right? So our first one would have been the 10-year bond. Our second one would have been the 20-year bond, right? And then we also look at the 30-year bond if you want to be nimble with it. The 30-year bond is pretty much in sync with the 20-year bond, right? Because if you pay attention, they both fail to sweep the low. So this confirms that this is a SMT divergence, right? And this is in correlation with Forex, Euro USD and GBP USD, right? In other words, if even if you might not see the SMT divergence on the dollar index, it's visible on the year bonds, if that makes sense. So that's pretty much how I identify if price is willing to respect or verify my bias or my trade setup, if that makes any sense. And if you found this video pretty much helpful, you know what to do, man. Like, yeah. So now this is GBP USD, and then this is the 30-year bond, right? If GBP USD is bearish, then the 30-year bond is bullish because DXY will be bullish, right? Pay attention. The Asian high was swept on GBP USD, right? The Asian low was not swept on the 30-year bond, right? So this is our SMT divergence, meaning that price is willing to draw lower and price here is willing to draw higher. And if you pay attention, right, this candlestick right here becomes a breaker, and then this is a form of displacement, meaning that lower prices are being supported, right? And if you pay attention to this one right here, this high right here, the minute this candlestick closes above it, it supports higher prices, if that makes sense. So if you found this helpful, I'm gonna repeat that. Just be sure to hit the like button, the subscribe button, and all those fancy things. And if you need any assistance, just be sure to hit me up on my Instagram or the comment section or Twitter. Yeah. Hope everybody has a nice day. Stay fresh.